Hello student, this is Ankit Shukla and from today's lecture we are going to start our chapter 2, that is Goodwill and its valuation, right? Okay, which means that in current chapter we will learn about what goodwill is and what are the various methods to value that goodwill. Okay, right sir. And okay, so let's start from the meaning of goodwill, that is what goodwill is. Right. Okay. So in simple language or in layman language, we define goodwill as the name and fame of any organization. Right. Means because of their name, because of their reputation, whatever the profit the firm is capable of earning is goodwill of that firm. Right. So for example, if we take example of our Basti city. Okay. If some people come from village, okay, and they want to buy some clothes, what they say to each other, okay, so let's go to Tulsian and we will buy from them. Okay, why? Because Tulsian has built a name in itself. Okay, right. So in simple language we can define that goodwill is the name and fame of an organization, right? Okay, but if we want to define goodwill in the language of accounting, right, so how will define that? Okay, right. So see, in accounts language, what goodwill means? Goodwill means the profit earning capacity, right? Okay, so in the language of accounting, we define goodwill as the profit earning capacity or capability of an organization. Okay, what it means? Let's take an example to understand this operation. This is the operational meaning of goodwill. Operational meaning means a meaning or an explanation which perfectly suits to its work. Okay, the way it is working, right? Okay, now let's try to understand the meaning of goodwill as profit earning capacity, right? Okay, so now let's take an example. Suppose a firm is earning 20,000 rupees per annum. Right, a firm is earning 20,000 rupees per annum. So that is the earning of that firm, right? And that firm is assuming that that firm is going to make this 20,000 every year and at least for 3 years. Right, so that we are saying that a firm is earning 20,000 rupees per annum, sir, right? And that firm is supposing that they are going to make this 20,000 for the next 3 years, right? So we can say that their earning capacity is 20,000 and they are going to make this 20,000 every year for at least 3 years, right? So our goodwill in this case will be 60,000 rupees. Okay, right, sir. So I hope the meaning of goodwill is clear to you, right? Okay, so that is the thing. Okay, now let's come to the valuation part, right? That what are the some methods to value goodwill? We understood the meaning of goodwill, that what goodwill is. So goodwill is of two types. Okay, one is purchased goodwill, right? The first one is purchased goodwill. Now what is the meaning of purchased goodwill means? Purchase goodwill means a goodwill for which we paid something to someone. Okay, so for example, someone went to the Tulsian shop and they asked them that we want to buy your business. Okay, and let's suppose Tulsian sold their business to them. Okay, so that means now there is another person who is owner of that organization, but people will go because they are knowing the brand name, right? So if you are paying something for an organization and you are getting some name and fame, so that is purchased goodwill, right? In simple language, if you have to pay something to someone for goodwill, that is purchased goodwill, right? The next one is self-generated goodwill. Now what the meaning of self-generated goodwill means, sir? Self-generated goodwill is a goodwill which we made by ourselves, okay, and through many years because of our hard work, because of, say for example, many years of hard work. Now Tulsian built a brand. Okay, so that is a self-generated goodwill. They created it by themselves, okay, because of their hard work, because of their better customer services, etc. Right, so that is self-generated goodwill. Okay, now in In books we will record only purchased goodwill. We will not record self-generated goodwill, because the basic of accounting is that we can record only those things for which something in money has been paid, or a money involvement is there in that. Okay, but in case of self-generated goodwill, we haven't paid anything to anyone, right? So we cannot record that self-generated goodwill, right? Okay, so we always record in our books a purchase goodwill. We don't record a self-generated goodwill, right? Okay, we can raise goodwill, but eventually we have to write off it. Okay, that is the other thing. We will discuss that later. For now on, you only need to know that there are two types of goodwill, that is purchase and self-generated. Purchase is something for which we paid something to someone, and self-generated goodwill is that goodwill which we made by ourselves because of our hard work over the years and because of our better customer services, right? Okay. And that is the thing. Now there are many other features of goodwill also on which goodwill depends. Say for example location. Okay, say for example you want to open a shop, say for example a stationery shop, right? But you are you want to open that at a place where there is no school. So there is no point of opening that there, because there will be less customer for that. Okay, so goodwill depends on various things. For example, location. For example, the owner person also. Say for example, you approached Amitabh Bachchan and you asked to him that let's be partner in our firm. Okay, and you want to start some media production or something. Okay, so that will affect the name and fame of your goodwill, right? Okay, so goodwill depends on various things. Okay, right. Now let's move to our next thing, that is our valuation of goodwill, right? So how to value goodwill of a firm? Okay, so in our syllabus there are three methods given, although there are many methods for the valuation of goodwill, but in our syllabus there are three methods given for the valuation of goodwill, right? And the very first method is average profit method. There are two more methods. One is super profit method and the last one is capitalization method, right? But in today's lecture we will focus only on the average profit method. Okay, right, sir. Now what is the formula of goodwill according to average profit method? According to average profit method, goodwill means sir, average normal profit. Okay, average normal profit or average profit into, right, into some number of year purchase. Okay, now what number of year purchase here means? Okay, so let's try to understand this thing. Okay, so what the formula of goodwill in this method is average normal profit into number of year purchase. Now what average normal profit means? Average normal profit means that on an average what we are earning, sir. So for example we have given 4 years profit. Okay, so we'll take the average of these 4 and we'll get to know that what is the average profit. So the method of average profit is very easy, right? Okay, so it will be total profit, okay, upon total number of years. Okay, right, sir. So for example in the question you have given 4 years profit. So what you will do, you will get the total profit, means you will add all those 4 years profit, then you will divide that by total number of year, that is 4. Okay, this way you will get the average profit. Here one thing that you need to focus is, for example in any year there is not profit, there is loss. Okay, so while totaling you will deduct that loss, but you will divide that by 4. So for example you have given 4 years data, right? But out of those 4 years, in 1 year there was loss. Okay, so what we will do, while taking that total, we will add 3 years profit and we will deduct 1 year's loss, but we will divide it by 4 because that total year is 4, right? Okay, so that is our average profit. Okay, so after getting average profit, what we have to do, we will multiply that by number of year purchase. Now what number of year purchase, you don't need to worry about it, it will be given in every question, right? What the number of year purchases. But what the meaning of number of year purchase is that for how many year we are going to get that profit. Okay, let me explain it to you. Say for example, in a year we made a profit of 20,000. Okay, and in next year, say for example, we made a profit of 40,000. Okay, and in another year we made a profit of, say for example, 420, 60 and 30,000, right? So this is the profit of 3 years. Okay, so in first year we made a profit of 20, next year we made a profit of 40, and in last year we made a profit of 30,000. Okay, now if we take the average of these three, it will be 40 plus 20, 60, 60 plus 30, 90 divided by 3, so 30,000. So that is our average profit. What it means, sir, that we are earning on an average 30,000 of profit every year. Okay, and if let's suppose we are going to make this 30,000 for the next 2 years, okay, that means we are sure that we will make 30,000 for at least 2 years. So that is our number of year purchase. Okay, so our goodwill will be 30,000 into that number of year purchase given in the question 2 that we are assuming here, but in question it will be given to you, right? So our goodwill will be 60,000 rupees. Okay, and this is the same thing that I explained to you while discussing the meaning of goodwill, that goodwill is the profit earning capacity of an organization. Okay, and that definition suits to our first method of valuation of goodwill. Okay, so we can say that meaning of goodwill, that is profit earning capacity of an organization or an firm, is the operational meaning of goodwill, right? Okay, so I hope this one is clear to you. But there is one more thing that you need to focus on. We are knowing that average profit, but you written here that we need average normal profit. Okay, we need average normal profit, then we will multiply that average normal profit with number of year purchase, right sir? Okay, so we will, number of year purchase will be given in the question, sir. Okay, and average we will find out, but what is the meaning of normal profit here, sir? Okay, so normal profit means that profit which a firm earn in its normal business operation. What it means, sir? It means that whatever net profit given in the question to you, okay, if there is any abnormal loss or abnormal gain, then you have to adjust that accordingly. Okay, let me explain it to you. So for example, you have given in the question that we earned a net profit of 20,000. Okay, but in that year there was an abnormal loss. Say for example, loss by fire, and that loss was of, say for example, let's assume 5,000 rupees. Okay, so that was our abnormal loss. Okay, so we earned a net profit of 20,000, but in that year there was a abnormal loss, that is, for example, loss by fire 5,000 rupees. Okay, so for calculating goodwill in this question, we will not take net profit of 20,000. Why, sir? Because that 20,000 is not our normal profit. Okay, this profit arrived after that abnormal loss adjustment. We are knowing that while preparing profit and loss account that we studied in class 11th, whatever the normal loss or abnormal loss, everything we were showing on the PL debit. That is, say for example, if in question loss by fire is given, we will show that on the PL debit side. Okay, so we can say that in this net profit of 20,000, abnormal loss is already adjusted. Okay, and we want normal profit. So what we have to do, we have to add this abnormal loss. Okay, so our profit which is normal will be 25,000. Okay, we want to know the normal profit, means if there is no no specific circumstances in any year, what is the profit that we will earn? Okay, that is our normal profit. So what you have to do, you have to remember only one thing: if there is loss, you will add this; if there is gain, you will deduct that, right? So if there is any abnormal loss or abnormal profit given in the question, you have to adjust that first, then you will get normal profit, right? Okay, let me take one more example. You earn an interest on investment or gain from investment. Okay, that is your non-trade investment. Non-trade means you invested some money out of your business, and you earned something from that investment. You invested something from out of your business and you earned something from that investment. Okay, so that is no doubt income, and you must have shown that in PL credit, and that must have increased your net profit, right? But that is not a normal profit. That is not that profit of which is earned through your business. That profit is earned something from out of your business, right? So we have to remove that gain to get to know the normal profit, right? So what we will do, sir, we will deduct that interest on investment or gain from investment, because that is abnormal gain. That is not a profit which is earned through our business, right? Okay. So I hope this is clear to you that what is the meaning of normal profit. What I want to explain in simple language is that if in any question you have given some abnormal loss or abnormal gain related to any year, so what you will do, you will firstly adjust that abnormal loss or abnormal gain. Then after getting that normal profit of that year and 2 to 3 other year that is given in the question, then you will take the average of that profit and you will find the goodwill by multiplying with number of year purchase, right? Okay, for getting it more understandable, let's take a question from our book, right? Question is that in the question it is given that calculate goodwill on the basis of 2-year purchase of the average profit of last 6 years. Okay, so it is given in the question that we have to calculate goodwill on the basis of 2-year purchase. That means we are knowing that formula of goodwill is average profit. Okay, whatever average profit is, average profit into number of year purchase. And in the very beginning of the question, it is given that calculate goodwill on the basis of 2-year purchase. So number of year purchase given in the question is 2, right? And the average profit of last 6 years. And this is the 6 years profit or loss given to us, right? So we have to calculate goodwill. Now what we will do first, okay, we are knowing that for calculating goodwill we need average profit and number of year purchase, right? And number of year purchase is already given in the question. Okay, so we need to find the average profit. So what we will do, sir, we will try to find the average profit. And how we will find that? We will simply, the formula is very simple: total profit divided by total number of years. But by taking profit, if you see, in the first year 60,000 is profit, but in next year there is 40,000 of loss, so we will deduct that 40,000. Then in again next year there is 30,000 loss, so we will again deduct 30,000. Then in the next 3 years there is profit, so we'll add then 1 lakh rupees of profit, then again plus 1,70,000. Then plus 2,20,000, right? Answer then divided by 6. So what we did, we simply took the profit of 6 years, and if that is loss we deducted, and if that was profit we added. Okay, now we will divide this by 6. So the total will be 4,80,000 divided by 6, right? So we will get a value of 80,000. That 80,000 is our average profit, right? Okay, now what we will do, we will multiply this average profit with number of year purchase to find the goodwill, because we are knowing that formula of goodwill is average profit, that is 80,000, that we just calculated into number of year purchase, which was given in the very beginning of question, that calculate goodwill on the basis of 2-year purchase, right? So I'll multiply this by 2, right? So it will be 1,60,000, right? So that will be our goodwill. Okay, so that was an easy question. So I hope that question is very clear to you. Okay, now let's take another question of our book. Okay, so the book that I am having, in that book, this is question number 4 of chapter 2nd, but I'll flash the question on the screen so that you can find the question. Okay, right, so let's see our question. X sold his business to Y. Calculate the value of goodwill taking into consideration the following factors. So what it is saying, that X sold his business to Y and we have to calculate goodwill on the basis of the given information. Now what the information given is, goodwill is valued at 3 years purchase of the average profit of last 4 years. Now see, here it is given that goodwill will be calculated on the basis of 3 years purchase. That means that number of year purchase is already given in the question, and that is 3. We are knowing that formula for goodwill that we studied till now is average profit, sir, and multiply by some number of year purchase, and that number of year purchase is given in the question, and that is 3. So I'll write it here as into 3, and it is saying in the question that it will be calculated on 3 years purchase of average profit of 4 years. That means we have to calculate 4 years average profit, then we will write that here, right? So that is very simple till now, right? Now what other things given in the question, let's see. Profit of the last 4 years were 2009 40,000, 2010 58,000, 2011 53,000, and 2012 62,000. So profit is given, so that is very easy. We have to only calculate average. But the thing is that we just discussed while discussing the question first, that we just solved, that if any abnormal gain or abnormal loss is given in the question, then firstly we have to adjust our profit to make it our normal profit, right? And after that we will calculate goodwill by taking average of that profit, right? Okay, that means here if you see in the question, we have given some information related to abnormal loss and abnormal gain. See, abnormal loss of 2,000 due to theft has reduced the profit for the year 2009. Profit of 2010 include abnormal profit of 4,000. A speculative and lottery profit of 5,000 was received during the year 2011, which was included in that year's profit. And profit of the year 2012 were reduced by 10,000 on such a machinery which was destroyed by fire during the year. So these all information are related to abnormal profit and abnormal gain, and these are related to every year, right? So that means we have to adjust our all the 4 years profit first and make it normal profit. After that we will calculate that average profit, right? And we will calculate goodwill. So what we will do, we will prepare a table to find the normal profit. So firstly we will write our net profit of every year 2009, 2010, 2011 and 2012, right? Now we will make the adjustment for the abnormal loss and abnormal gain. Okay, and the first thing is, see the first thing, abnormal loss of 2,000 due to theft has reduced the profit of the year 2009. Okay, so in 2009 there was an abnormal loss, okay, and that was of 2,000 rupees. So that means in 2009 our profit got increased by 2,000. That means that we have to increase our profit to make it normal, right? So we'll write here as abnormal loss, okay, plus 2,000, right? Okay, now the next information, profit for the year 2010 include a abnormal profit of 4,000. So what it is saying that in 2010 there was an abnormal profit, and that abnormal profit was of 4,000 rupees. So what we have to do, that was abnormal profit, that was profit. So we have to deduct that, right? Because that was abnormal, that was not normal profit, right? So abnormal profit. Okay, I hope this is clear to you. Okay, right, sir. Now the next information, a speculative and lottery profit of 5,000 was received during the year 2011, which was included in that year's profit. So what it is saying in the question, that in 2011 there was a lottery or a speculative profit, means profit earned from gambling, etc. So, and that was of 5,000 rupees, right? So that was profit in nature, so we have to deduct that. Okay, and why we are deducting that, sir? Because that was not a normal profit, that was a profit which is not earned from our business, right? So we will deduct that speculative profit from that year in which it was included, right? Okay, now next information given in the question, profit of the year 2012 were reduced by 10,000 on such a machinery which was destroyed by fire during the year. Now what it is saying, that in 2012 we included a loss by fire thing, that was 10,000, right? So that must have increased, that must have reduced our profit, because that was a loss by fire. Okay, and that loss by fire is something of abnormal in nature, right? So what we have to do, we have to remove that loss by fire thing. Okay, and that was related to 2012, so we will adjust that only in 2012, sir, right? And the amount given in the question is 10,000 rupees, so we will add it here because that was loss. Okay, 10,000 rupees. Now there is no other information related to any abnormal profit or abnormal loss. So what we will do, we will calculate firstly our normal profit. Okay, so we will add and less these things to get our normal profits, right? So this will be 40 plus 2, 42,000, right? 58 minus 4, it will be 54,000, and 53 minus 5, this will be 48,000, and 62 plus 10, it will be 72,000. So our profit was not normal profit, it was including many abnormal things. So firstly we adjusted this and make our all the 4 years profit as normal profit, right? Now we can easily calculate the average profit, because the profit that we are having is our normal profits, right? So in the question it is said that goodwill will be 4 years average profit based and 3 years number of year purchase based, right? So firstly we will calculate our average profit, and that will be 4 years purchase. So what we will do, sir, we will take the amount 42,000 plus 54,000 plus 48,000 and plus last one 72,000, right? And divided by 4, because we have to take the average of 4 years, right? Okay, sir. So we will do this and we will add this, so we will get a value of 2,16,000 in total divided by 4, sir, right? And if we divide this, we will get a value of 54,000 rupees, right? So that is our average profit of 4 years. Now goodwill is very simple to calculate now, because it is given that goodwill will be 4 years average into 3 years number of purchase. So we calculated it 54,000. So we will put 54,000 on the place of average profit and multiply by number of year purchase, that is 3. So we will get a value of 54 into 3, right? So this will be 1,62,000 rupees, right? So this will be our goodwill. Okay, right, sir. Okay, So I hope this question is clear to you, and in today's lecture we finished the concept of goodwill, what goodwill means, and we understood one method of valuation of goodwill also, right? We solved 2 questions related to that topic. So I hope you will solve question related to average profit method on the valuation of goodwill, and in next lecture we will discuss the super profit method and question related.